Bitcoin's weekly chart is beginning to gain strength. However, it is not technically just yet bullish. Can the bulls push it over the line, or will we inevitably see another correction? Let's go ahead and find out. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having an awesome day today. In today's video, we're going to be taking a look at Bitcoin on the short term and of course the weekly charts, discussing it from a technical and structural perspective in relation to the current price action and potential future direction for Bitcoin. As we know, over the last couple days, Bitcoin has been building up some strength. That strength is now translating to the high time frame charts, but it is not quite just enough to flip these weekly charts bullish. Before we do get into the video, smash that like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency and of course with Bitcoin. If you're interested in trading and developing your trading skills, you can join us in our VIP group. We have over 600 members. We post trading signals with exact entries, exact targets, exact stop losses, and trade justification for our setups. We also have a general chat, a trading chart and education chat, our news chat, our video chat, our trade setup chat, and our help chat for all of our members to increase your trading knowledge and of course develop your trading skills. If you're interested in joining that, you can contact me via the pinned comment in the free channel. You can find our entire trading track record with over 730 trades at a 79% win rate. For more information, contact me there. Let's go ahead guys and jump into the video, starting on the market data. So how are we currently looking? And of course for September, we're coming near the end. We've got about 10 days left of the month. We're actually sitting up 4.58%. Again, defying odds. We haven't seen a green September for like 7 years. So maybe long overdue for it, but according to the historical data, there was a 76.5% chance September was going to be red, defying odds. Moving on to our 24-hour volume, we are down 6.44%, sitting at 59 billion, actually relatively low. Open interest is still quite high. Liquidations are down 10% at 61 million. Looking at those liquidations, we can see it has been more or less toward that long side. However, not aggressively hedged toward the long side. We're still quite split down the middle at 38 and 22. Again, indicative of a little bit of sideways chop with a small amount of volatility. And again, a lot of those liquidations actually did come from that interest rate decision, and the interest rate decision came out to be a pause. We'll come back and discuss that in just a moment. But you can see just on the price action here on the 5-minute chart, within the last couple days, right? The last couple days, we haven't really seen all that much, right? We've seen a lot of chop, a lot of sideways price action, a lot of indecision, and just overall really tricky trading environments. We're seeing open interest pump massively up, billions up, and then come back down. So again, it has been a very tricky time to be trading, a very sporadic time. And again, you can just see by the look of this price action, the price really isn't developing any clear ranges or structures, is very much just chopping sideways. Moving from there onto the volatility index, we can see on the 30 and a 60-day period over here, the 30-day period volatility index is still falling toward the downside, and the 60-day period volatility index is still doing what it's been doing for the last 20 days, chopping sideways. Moving over to the DXY. The DXY is pumping back up into resistance. We're at 105.44. We did see a wick toward the downside. Again, that was a result of the interest rate pause. We saw a short interest rate pause. The market did correct a little bit, and now the DXY has pushed back upwards. Again, the pause isn't really too significant. It's more so the potential future decisions. And again, like we've said already, the market doesn't really account too much for one decision, whether it be one interest rate hike or whether it be one piece of data suggesting inflation is going up. It's more consecutive back-to-back results that impact the potential future decision for interest rates, and that has a profound impact on the systematic risk in the market and thus people's actions. So looking at interest rates right now, we did get a pause. There was an announcement that we do expect a interest rate hike later in the year. Now, I do think that announcement holds some validity just because inflation has been going up on the month-to-month basis. So inflation has been rising, therefore the probability of an interest rate hike at a later period will start to rise again. And again, if we look at that, we can see there's a 29% chance that we will get a 25 basis point hike for our next interest rate decision, which is in 41 days. It is also very important to note that we do have the US federal elections coming up in November, and that is going to be after the next interest rate hike. It'll be very interesting to see if they do not hike moving to elections. I know governments have a common tendency of doing that. They avoid hiking interest rates just before elections, which can potentially impact voters' decisions. As we all know, it's all a big political power grab. It's all about votes, so you definitely don't want to jeopardize those votes. Moving over to Bitcoin, guys, and the stock market real quickly. The stock market, again, very much same thing is happening over here. We do still expect, ever since over here, guys, I've been saying we expect this continuation down towards the area of liquidity. We don't see any reason right now why that won't happen. In fact, it is actually looking quite bearish. And again, the Dow Jones in a very similar position. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Let's go ahead and jump into Bitcoin, and there is a lot to talk about. We're going to be talking about the weekly charts. We're going to be talking about the monthly chart really quickly. We'll be talking about the daily chart and, of course, really briefly, the short-term price action, because again, although there really hasn't much happened on the short-term price action, still good to discuss, still good to go over. So let's start on that daily chart. What is happening for Bitcoin? Currently, Bitcoin is in a weekly downtrend. Again, the same kind of weekly downtrend we have seen numerous times play out. There's downtrending diagonal resistance represented by, of course, this diagonal trend line is representing the weekly bearish trend. Of course, we are in this weekly downtrend, right? We saw a similar weekly downtrend develop above support prior. This was in April and of course June, and we can see that one broke toward the upside. Again, we're seeing the similar downtrend develop in this instance. However, a downtrend is a downtrend until it is not. Resistance is resistance until it is not. Although we are seeing signs of strength, such as the daily close over 50 EMA, which is a fantastic sign, such as momentum rising, again, a fantastic sign. There are also warning signs we do have to be a little bit careful of moving into this. And this is why I always say, if you're taking longs, take your longs at support, okay? Do not take your longs at resistance. Again, you could be right. Maybe you jump in your position late and maybe you're correct. But if you take that same behavioral pattern, apply it to 1,000 trades, you're more likely going to be wrong over the broad scale of things, okay? So do not look at the result of a singular trade and see it as a win and then think the method behind that result was a correct method or a method you could replicate for profits over a period of time. Sometimes shit just happens, right? Sometimes you just get a win and it just is a win for whatever reason. It doesn't mean you can replicate that again. So moving over here, let's talk about the zones and then the potential warning signs. So as we know, if we delete everything on the chart, we have two major things. And that is going to be, first and foremost, the most important level, which is the 25.2 to 24.4K level. And I can't stress this enough, and I've been stressing this for a very, very long time, that the 25.2 to 24.4 is the major macro bearish trigger, meaning a loss of this level will result in a high time frame continuation lower, potentially as low as 20 to 18,000, okay? But for that to work out, we have to lose this range low. We absolutely need to lose 24.4 to 25.5 before it happens. You can see that range low represents the support of this entire cluster of 6 months of price action. So until then, while we remain above that level of support is defined as a major bullish support, and therefore the high time frame trend, although isn't particularly macro bullish where we are right now, we are still in this high time frame weekly bullish position. We are in a weekly downtrend, but we're in this weekly bullish position as we remain above this major bullish trigger point. So extending from that, if we break above this downtrending diagonal trend line, we delete the weekly bearish trend. We enter a weekly bullish trend. That weekly bullish trend has the potential to take us all the way back up to 32,000. Again, it doesn't mean it's going to. We have resistances at 28K, we have resistances at 28.4, and very importantly, we have resistances at 29,000. Those are all potential targets. However, it does tell us the range of directional move is possible. Here is the thing, guys. Until we break out, resistance is resistance. And as the price starts moving in one direction, it gains not only more strength, but it also gains public perspective, right? Like the public becomes more bullish. And we see it all the time. After large rallies, every man and his dog on Twitter is tweeting, we're going on a new all-time high. Every time we see a huge crash, every man and his dog is tweeting, we're going to go to 10K. Remember over here, guys. Remember when we're at this price action, everyone was saying it was 45K was next. I had people tell me that I was wrong for shorting over here. I was wrong for selling my Bitcoin. We're going to go to 50K. Same shit happened over here, guys. We had people saying we're going to 10K. And again, we're not just saying people were saying that. People were literally betting on that. They were saying with such certainty. Again, the majority is always wrong. But let's get into the warning signs. When we take a look at structural breakouts, we look at a few things. We look at, number one, has the trend itself been broken? Number two, do we have the strength behind that breakout to validate a continuation upwards? So we take a look at this. Has this trend line broken? It hasn't. The downtrend trend line has not broken. Do we have a positive momentum flip? Well, it looks like we have these points of resistance. We have the breakout. We do. So we do have a positive momentum flip. Has our CVD, has our volume exceeded our local high points of resistance? So again, we take these local high points. The local high points we're looking at are, of course, the high points of volume based on the rejection points on the chart. We can see we draw those down to these points here. Have we broken out? No. So what does this tell us so far? We have not seen the price breakout. The volume hasn't broken the prior highs. And of course, the momentum has broken out. This is a potential danger sign. If we see momentum massively front run a breakout, it could actually tell us that momentum could exhaust prior to the price breaking from this trend. That could be a warning sign for a potential rejection. Again, that doesn't necessarily mean we're going to reject, but it's a warning sign for a possible rejection. But to talk about this further, we need to go to a high time frame, as this is very, very important to discuss. What is the high time frame chart suggesting? So let's take a look at our weekly chart. If we take a look at our weekly chart, first and foremost, we can see we are currently retesting the bull market support band on the weekly. The current bull market support band lower band is sitting at 27.28. Bitcoin's current price action is 27.12. So we actually just have come up and touched that level. And that previous touch of that level was actually this wick. This wick right over here actually touched that lower band of the bull market support band on the weekly. We have now currently rejected. We have 4 days left of this candle. If this candle closes under, that will be perceived as bearish. It will be considered a bearish retest, and potential continuation lower could develop. Again, While we remain underneath this, the overall trend is represented as a downtrend. If we take a look at momentum, we can see we have the money flow index moving upwards. However, we are underneath the 0 point. The blue wave representing momentum is underneath the 0 point. So we do have negative momentum as of right now. If we take a look at the RSI, we can see the RSI is underneath this downtrending diagonal. Again, this downtrending diagonal is of course representative of two things. Number one, the bearish divergence of the high, but number two will represent a trigger point for which momentum will flip positive. Therefore, we have negative momentum under. If we go back to the chart above us and take a look at two more indicators, the 50 EMA, okay, and smaller time frame averages and the Gaussian channel, we can see that currently we are underneath the upper band of the Gaussian channel. That is sitting at 28.3. And secondly, we are underneath the small time frame moving averages and currently retesting the 50 EMA on the weekly chart. So we go ahead and equate all of that together. Number one, we are underneath the weekly downtrend. Number two, the momentum on the daily chart has massively front run the breakout. Number three, the weekly momentum is still negative. Number four, the weekly price action has retested the bull market support band and currently failed to break through. Number five, the price action is underneath the Gaussian channel upper band. And number six, we are currently retesting with a failed breakthrough of the short-term moving average. If we take a look at all of those things, we can say the probability of a rejection here is still very likely. And we can word it a different way. We can say, as of right now, where the price action currently is at, there is not enough confirmation to say with certainty the price is going to continue aggressively upwards. We need to push just a little bit higher, take out these technical levels to validate or to indicate, which would be a better word, a shift in weekly strength for the price action. Until we get that, technically nothing has changed. Technically, the only thing we have seen is a strong bullish reaction at support, which has resulted in a bounce. The bounce has not actually taken out any significant levels. If you do look back on the chart, the next significant level of resistance is actually at 28K. This is the next significant level. Every other little small time frame range resistance level we've been discussing over the last few weeks is actually quite insignificant on the higher time frame. These only had relevance to try dissect and understand what the price action was doing in the current. If we zoom out to the higher time frame, do these levels apply any significance? They do not. So when are we going to see a significant shift? That is likely going to be when 28K is broken. And for 28K to be broken, we need to break out of this downward diagonal resistance. So my whole premise of today's video, the whole point I'm trying to drive home is, do not make the mistake of getting overly bullish before the charts are telling you to do so. Just because the price is going up does not mean you should become overly bullish, just because the price is going down doesn't mean you should become overly bearish. Okay? Follow your validations, have a set of rules. If they do or are not met, avoid trading. Now, I have to say for sure, this is probably the least amount of trading I've done in a month for many, many years. This September has probably been the least amount of trading I've done personally, just because the price action has been so choppy. As a momentum trader, basically my entire strategy is centered around catching reversals based on momentum shifts. If I do not see clear volatility, I do not get a lot of entries. If we see a lot of chop like this, there is almost nothing my strategy is going to go ahead and suggest to enter on. There are a few opportunities here and there, but they are a little bit more spread out. And that is okay, guys. We cannot expect the market to melt and bend towards our liking. The market is its own entity. It's going to do what it wants, how it wants. It is our job as a trader to adapt to the market, and sometimes the best decision you can do is make no decision at all. If you are a trader, you shouldn't care what Bitcoin's price action is doing. Quite literally, you should be able to go away for a week, pretend the charts don't exist, come back and get back into your trading without worrying about what the price action is. Because the profit you make is on the short term, and the profit is derived from the percentage change of your entry to your exit. If you're an investor and you care about long-term accumulation, that is when you must worry about opportunity costs, which is the lost opportunity when Bitcoin's price moves. But do not confuse the mindsets. If your actions are aligned with a trader, you have to shift your mindset to match that of a trader. Otherwise, you're going to be in a constant state of FOMO, fear, greed, missing out, all of those negative emotions, which is going to shift your decision making and emotionally impact, again, your trading. I'm going to wrap it up there. We'll quickly go over the short term. Again, as per our high time frame analysis, we have rejected from some very key levels. We can see on the short term price action, go ahead and just zoom out a little bit. We can see we do have that downtrending weekly trend line coming up relatively closely over here. Perfect. If we take a look over here, guys, we can also see that, like we mentioned, that 27.2 area is going to be that bull market support band resistance. We can also see a chunk of orders over here moving down into a gap. What we expect in the short term would be a correction towards that 26.8K level. Now, when would that be invalid? The invalidation point would, of course, be a break above 27.25, this horizontal orange line. So we do expect a short-term correction until this level is broken. If that level is broken, we then expect a retest of this diagonal trend line. If we lose 26.8, expect a further correction towards our base of support, which is going to be represented by the midline of this horizontal channel formation. And again, that is where we're going to run into a whole heap of orders, which could potentially bounce the price. Thanks for watching. And I'll catch you guys in the next one. Be sure to check out the Crypto Academy. It is a 10-unit course developed by myself and Wolves of Crypto to teach you guys how to trade and, of course, develop your trading skills. Check it out down below. Thanks. I'll catch you next time.